Ego. It's probably the biggest way I'll get myself in trouble in these markets. But I'm aware that right now, I'm probably doing something wrong, and I was too proud to admit it. Also, I'm going to tell you about my debt bomb theory and what I think is coming, but how it may not be here yet. And finally, I'm going to show you the company that I've been watching and really paying attention to a lot lately, and the one that I'm looking to buy next. First, I want to say what I've been doing wrong. So I have been really in this mindset of like, I'm going to predict where the markets are going, and that's where I'm going to position myself so that everything comes to me. I think that's a mistake because I've missed out on a big rally here in the markets. Now I can show you this is the S&P 500, and you can see that it has just been trading in this upward channel this entire time. And the whole time I've been on the sidelines and actually I was playing the short position when this was all coming down. Okay, so I have been too proud to switch that position or to sell out of it because I've been like, the data is so bad, it's going to reverse, it's going to reverse, it's going to reverse. And I've been losing money the whole time to just follow it. The trend is your friend. That's what I keep hearing over and over again. As I'm reading a book right now on investing, I'm listening to these interviews with great investors, and they're just talking about don't be too proud. Don't be too entrenched. When you have a theory about the market and then it tells you that you're wrong, be wrong and change your mind. Be willing to change your mind. Basically, the banks started to collapse. The Fed started injecting money into the markets, and they've been able to prop things up and pretend like nothing's wrong. Eventually, this will fall apart. But for now, it's moving upward. And why try to fight the Fed? Why try to go against the Fed here? They propped everything back up, and I was like, oh, this is short term. It'll turn around. It'll turn around. Well, they haven't really turned it around. They've been finding ways to continue to put money into the system. So I don't know what's going to happen next, but I've been wrong this whole time. And I should have been willing to be flexible that, like, especially once we started breaking beyond this point over here, to go, hey, wait a second, maybe this is for real. Right now, we're at this interesting point where it's either going to continue to break and we won't hold this level, at which point I think, you might get a little retrace and then a drop, or maybe we get a bounce off of this level and it just moves back up again. I need to be willing to be absolutely wrong on this. Now let's talk about the debt bomb theory and why I think this is a big deal. So I was spending some time talking with a friend of mine, and we were discussing markets and debt. And I was saying that, I'm watching the debt because I think there's a lot of potential debt restructure and debt coming due and all this. And he was encouraging me to really dig in, get into some annual reports, and to look at the long-term debt and what companies have secured, because there's a difference between having a lot of debt coming due versus having a ton of low interest debt secured and then adding just a small amount that's being refinanced at a higher rate. Here's what I found. I think there are some companies that are well positioned right now, and they have gone out of their way. They either have low debt or they've secured low interest debt. Some companies, however, are in that position. And we just saw Yellow go under recently, and I've been looking at other companies that look a lot like Yellow Trucking. If you're not familiar, Yellow went bankrupt here recently, and that's not good for the economy. We're going to be losing jobs in that. So I think there's kind of this effect that'll start to happen with, this is why I would call it a debt bomb, is these companies have a bunch of debt. It needs to be refinanced. It eats into their earnings because the interest rate is higher and their cost of finance is higher now. So their earnings go down. With that, they decide we're going to lay some people off. When they lay people off, less money goes into the economy. As less money goes into the economy, their earnings go down further because there's less money to be made. And then as their earnings go down further, the cycle kind of continues, right? It's this self-fulfilling doom cycle, I guess, potentially, that could be out there where as one company goes toxic and falls apart, and like Yellow, they laid off 30,000 workers. That's just the beginning of this process, and then it's kind of a slow fall, but I expect it to start to accelerate as things get worse and worse. Now let's take a look at a stock that's actually outperformed the S&P 500, and one that I'm watching, and one that I want to buy soon, but I won't buy yet. Let me show you what I'm talking about. First of all, this company is one that I was supporting without really thinking about it or knowing it before I got into investing. I'm going to read off some brands that they own, and then I'm sure, just like me, you've been supporting them as well. If you're not, wow, good for you. I don't know how you're doing that. But let me go ahead and read to you some of the brands that they own. They own Head & Shoulders, Herbal Essences, Pantene, Olay, Old Spice, Braun, Gillette, Venus, Crest, Oral-B, Metamucil, Vicks, Pepto, Downy, Gain, Tide, Cascade, Dawn, Febreze, Mr. Clean, Swiffer, Love's, Pampers, Bounty, Charmin, Puffs, and a bunch more. So what is this company? It's Procter Gamble. Now, there's a lot of reasons to like this company. Let's go ahead and head over for some insights on Procter & Gamble and take a look at some of the stats behind it. I'm going to get into the price action a little bit more here soon, but you can see that it's fairly strong so far, and we'll talk more of the technicals and what I think in a little bit. Here's a chart of revenue growth. You can see that going back 30 years or so, it was $15 billion in revenue, and now annually we're making $82 billion as a company. So Procter & Gamble looking really good in that regard. For free cash flow, you can see again just a very similar chart, steady growth, not being eaten up by a bunch of stock-based compensation, so that's good. This cash and debt, so the debt is $24 billion, but the market cap on this company is $370 billion. So the debt is very, very small, just over 5% here. Now you could argue potentially that that's maybe not enough low interest rate debt in case something does happen, but this company doesn't have very much debt to service, and so their debt service costs are going to be low, and they do have some secured for the future, and most of it's locked up in long-term low interest rates, so that is good. Now when it comes to the dividend, this has just steadily climbed. We can go back, let's go back to 2003, where it was 21 cents per quarter per share, and we're now at 94 cents per quarter per share. And then when it comes to shares outstanding, you can see that this trend has been very positive, moving in the downward direction, and this is good for price action. I think this is a big deal when you talk about return on your capital employed. Some of these companies are eking out, like a 3 to 5% return, and Procter & Gamble showing you a 21% return on capital employed. That is excellent. So this is a company that I definitely want to own. The dividend currently 2.4%, but again, steadily climbing. So this is one you can buy and hold, and just they've raised it almost every single year. I just want to show this chart. This is looking at several years worth of action, but you're going to see that it's climbing, kind of hits this cap, and then starts moving down, and we're kind of bouncing off of this trend line. It seems to me that we probably have some downward action, probable, not guaranteed, but probable. And so I've marked this out as a potential move and would love to see it get down to this 140 range somewhere in here. And this is really zoomed in. So this is within the last couple of weeks. Now you can see that we're basically flirting with this line over and over and over again and just testing and testing and testing. So I don't know where it's going to go, and I can't guarantee it. Again, technicals are not my strong suit, but it's something I'm focusing on and trying to learn. So I think either it's going to give up, there will be some capitulation, and it'll move down. And again, we're looking to buy in this 140 to 145 range. Or it's going to break this, flip it into support, and then move higher. And so I'm really watching this one closely. This is a company that I want to buy more of. I currently own it. I want more shares, but I'd like to see the price come down a little bit. I think that's the most likely move next, but we'll see. I was asked last time to just make a comparison between the S&P 500 and my trading account. I can tell you the S&P, it's kind of done this big bounce over the last month, but it's up about 1% in that time. And my account, once I take any money that I've invested out and just the action of the account, is down about 1%. So I'm doing worse than the markets right now. Again, I told you there's probably maybe too much ego built into what I'm doing, and I need to make some changes. So I may make some changes. It depends what happens at this point. If we get a bounce and start moving back up, I'm going to make a change. If we don't, and markets break and start moving lower, I'm going to hold, and I'm going to wait for that move to really take off in the downward direction. And I've got basically like two portions of my account. I've got like a dividend paying account where I'm just going to hold, and it doesn't matter what the price does. I'm not going anywhere with it. And then I've got the side of my account that is like trying to trade, trying to come out ahead and find ways to be better than the markets, or at least with the markets. As they move, I want to move as well. As I've been listening to financial interviews, I'm listening to this same humility over and over again from traders who have learned to trade well, that say, predict what the market's going to do, get your conviction about why it'll do that, establish a position on that theory, but when it doesn't do what you expect it to do, get out. Be flexible, be wrong, get out, admit that you're wrong, and then start looking for what it's doing now or what you think it's doing next, so that you can be in the trade as it's moving rather than just missing out or being too proud and holding a position that's not winning because you think you're right, even though you're getting clobbered. Last week, when I gave you an update, $8,781.30. As of today, $8,711.31. So I have given back about $70 this week. As far as poker goes this week, I played one short 2-hour session on the way to work before I got there, and I had a pretty, not card dead, but flop dead session where I just didn't make any hands. I stole a couple. I did win one or two pre-flop, and then I just mostly missed. So a 2-hour session, there's going to be more variance. I felt like as I was leaving, I wish I could stay another like 5 to 6 hours and just kind of allow that variance to settle out a bit and to have a chance to, everybody's going to get their distribution of hands. And when you sit there for 2 hours, you might get a really positive one, a flat one, maybe a really negative one. You don't really know what's going to happen in 2 hours. But if you sit there and play for 8 hours, you're more likely to get that pretty normal distribution of hands and have some opportunities to make some money. With that $200 loss, we're now down to a very abysmal profit on the year, and it's going to take even more work to get back. I don't know. That's just part of poker, and if you look at the long-term trend, it doesn't look that ugly. Right now, the very short-term trend looks very ugly. 4 sessions, had a good session, then 3 in a row where I've given money back. So our hourly is minuscule at this point. We're not making hardly anything. But don't worry, that'll turn around. Not worried about it. We'll just keep playing poker and things will come back our way. It's going to be a while before we invest more poker money because we got to get back to our all-time high so that we can keep getting to a new level of earnings before we start investing again. With all that in mind, that's your weekly update for you. Thanks for being here. I hope you enjoyed it. I'll talk to you again next time, and hopefully I have some better news for you.